Joel here at Myra, and I am the creator of Honest Insurance NY. So today we're going to be talking about home insurance, or some may call it mortgage loan insurance. What is it, why do we need it, and what are some types of it? If you passed away, or if you're unable to pay for any sickness or accident that you got into, you have no job, no money, and you can't pay for your home loan, then what happens, right? So typically there are two types of home insurance. First we have MRTA and MLTA. MRTA is actually mortgage reducing term assurance, and MLTA is mortgage level term assurance. The takaful equivalent is MRTT and MLTT, which is mortgage reducing term takaful and mortgage level term takaful. So this home insurance is the one that covers your life as a home buyer, and the amount is basically covering the bank loan that you just got. So we're going to break it down into what is mortgage reducing insurance and mortgage level insurance. So the reducing and level here is actually the amount of coverage you want to cover on the bank loan of your house. Alright, when we talk about reducing, as you pay your bank loans, right, the principal amount, the interest will go down throughout the years. So if you want to get covered for the amount of loan only, that's where reducing comes in, because each year or each month as you pay your loan, the loan is reduced, as well as the insurance cover is also reduced similarly. While on the other hand, you have mortgage level, where, for example, right, if you get a house that is 500,000 and you say, okay, I will get insured for 500,000 as well, so if anything happens to me, then I'll just take 500,000 to cover the loan. But mortgage level insurance still lets you claim the full 500,000, so you can take it out to use only for the settlement of the loan, and then the remaining balance you can actually use it for other purposes in life. So there's going to be a few aspects that we're talking about today, mainly 4 aspects of what home insurance is. So the first aspect is coverage. What actually does it cover? It actually covers the home loan that you got from the bank. So home insurance actually is protecting the bank's benefits, because it's actually not for your sake, because the bank has given out this loan to purchase the home, but they're wondering, what if this homeowner suddenly gets into an accident, passes away, and like what in the insurance industry calls TPD, which is total permanent disability. So what happens if the person can't pay my loans? So that is why this coverage is actually on your life and for the bank's sake. So aspect 2 is payment structure. MRTA and MLTA, you need to pay for the insurance premium slightly differently. MRTA is technically a one lump sum, while MLTA is, depending on like a personal insurance, it could be paid monthly or quarterly or annually. While MRTA is a one lump sum payment, it does feel a little bit heavy, and that is why when you get your bank loan, the banker will always say you need to get an MRTA, and then they will actually package it together and they will spread it out into your house installments, so you don't actually feel so heavy right here. For example, my own home that I purchased recently, about 600,000, the annual premium for the MRTA is about 20,000. So if you think about it, 20,000 is quite a huge sum. But 20,000, if you spread it over 35 years of your loan, yeah, it's about 50 ringgit a month. So that's how the bankers actually try to convince the home buyers to actually get MRTA, because it's cheaper to start off with. The third aspect that we're going to be talking about is the cost. So how much does it cost between the two, right? Mortgage reducing is actually cheaper. Amount of loan goes down, so does your insurance coverage. So it's actually cheaper than MLTA. How much cheaper, you may ask? Actually, it really depends on a lot of factors like the property value, the age of the home buyer, the gender. But as an industry standard, it's probably 10 times more. So like I said earlier, 20,000 total premium, 10 times more is 200,000. But you get to pay that in a monthly term or an annual term throughout your whole life. And the benefits are definitely different. So in terms of cost, yeah, MRTA is definitely way cheaper. It's definitely easy to pay because it goes with your bank loan installment. So moving on to the fourth aspect, which is the payout. So what do I get if I get to claim for this home insurance, right? So mortgage reducing and mortgage level, you get money for the home. In case you as a home buyer, well, if you're not around anymore, probably your next of kin will get the money to pay for the bank. So MRTA, I would say the con of it is that it will pay the bank only the loan amount that you still owe them. Because as it reduces with the loan, then technically you're only covering the loan amount. Your next of kin gets no cash, no excess money. So actually you're just paying it to cover the bank's interest. So on the other hand, MLTA, which I said your insurance coverage remains the same level throughout your whole life, it actually covers more than your loan amount. So let's take an example. If you take an MLTA for 500,000 for your property, and then maybe 10 years later your property loan is about maybe 300,000, so there's just excess of 200,000 ringgit. So what happens to it? Where does it go? The bank gets paid 300,000 ringgit, and your next of kin or your nominee will actually get the excess cash where they can do whatever they want. They can buy another house, maybe with Myra, who knows. So yeah, that's all for the aspects of MRTA and MLTA. Thank you for watching and listening. If you have any further questions, feel free to DM me at Honest Insurance and more. Bye everyone.